So today's Friday, and I know everyone's talking about interest rates. That's boring. Let's talk about something that's been going on in the financial plumbing of the globe, which could affect us and the dollar tremendously. And I don't know the answers here. I'm only going to point this out. So on TikTok, I pinned up a video I did on the Taiwan dollar on 5/5/2025. Okay? And in there, showing through the articles, it stated several times from different people that the globe as a whole had stopped hedging their dollar holdings against their currency, and there could be for multiple reasons. One, not everyone is totally hedged. So in other words, it's impossible to be totally hedged because of financial factors, costs, and so forth. But it is generally considered, and generalizations are only true when you're generalizing, that the globe was not hedged enough against the dollar. And it seems that we're around 60%, and today we're now around 70%. But let's go through what's really going on here. First, though, let's look at the dollar index over the past year, okay? And we all know we started on January 20th, and you can see we went, they were talking about it all the way till the February Liberation Day, and then the dollar took a dive. But you have to admit, since basically even let's say early May, late April, we kind of been flattening out and staying where we are, okay? When you look at it since 1987, I just want to point out that, we really haven't come down that much. And the other thing that's important in this conversation is look where the dollar went in 2008, all right? So let's start there. Let's start with the 2008. Why did the dollar go to 2000 down in 2008? Now, anybody who follows this channel knows we've talked many times that during the 2008 crisis that there is generally a shortage of U.S. dollar funding throughout the world. You would think that would be positive for the dollar. But if you remember, the United States Fed and Treasury cut a deal with the Europeans, and we lent them it was a lot, somewhere between 150 and 250 billion dollars worth of dollars at 25 basis points. We normally charge 50, we only charge 25. So many institutions, but you have governments and then you have institutions. This is critically important in this discussion. So the institutions had to raise liquidity quickly, and they did that by selling dollar-denominated assets, i.e. down goes the dollar, all right? And you can see that unsecured lending and commercial paper markets force institutions to seek dollars through FX swaps and other secured funding markets, raising funding costs sharply. So again, remember this, that they got it through FX swaps, so dollar swaps. And we'll show you why that's so important. You will see in the video from Taiwan, if you decide to watch it, that Taiwan was not fully hedged on their dollar holding, but more importantly, their insurance industry was not hedged basically at all against the dollar. And so they had major problems right then and there. And if you remember, the Taiwan dollar got hammered, all right? So then you sit there and you say, okay, we're not hedged enough, all right? What do we do to hedge? What's our options, okay? So you can do currency forwards. You can do currency option. You can do currency swaps, which are the biggest thing that people use, all right? And you can see here, swaps are especially useful for entities with recurring payments in multiple currencies, i.e. an insurance company has everything around the world, all right? So it points out here in the first paragraph that Taiwan primarily used non-deliverable NFTs, FX swaps, and currency swaps as its main strategy to hedge against US dollar risk, especially for the large institutional investors and large insurance companies. Just what we said, all right? So what's an NFT? A preferred instrument among life insurers and exporters for short-term dollar exposure management especially in offshore markets. So in other words, they're more worried about, I have to make a payment in dollars. I want to just cover that payment. FX swaps and currency swaps, and this is directly between Taiwanese banks and abroad, indirectly with the support of the central bank, which funds local insurers hedging via managed FX swaps. Okay? So all this is saying is that there's a symbiotic relationship between the central bank and the big institutions as they try to manage their way through this. No one's on their own. Everyone's got to figure this out. And you can see down the bottom paragraph, Taiwan's overall currency hedge ratio for life insurance and corporations in 2025 ranged from 60 to 70%, though rising costs and market regulations often limit full coverage, is what we're saying. And what's the cost? You're putting on a hedge, it costs you money. And if the dollar is moving down and you're moving up, it's going to cost you more. So they say here in 2024, all right, the Taiwan life insurers had 70% invested in foreign assets, predominantly USD dominated bonds, okay? Their insurance. The sector's average FX ratio was 61.5%, so nearly 40% of the holdings remain exposed to FX risk, all right? 40%. Sharp swings in the Taiwan dollar caused sector-wide valuation losses, especially for assets not fully hedged. 40% were not fully hedged. So what happens then? So what's a currency swap? What does Taiwan do? Taiwan essentially sells one currency and buys another simultaneously through an agreement with the counterparty, usually a foreign bank or an institution. What does Taiwan buy and sell in a currency swap? Taiwan sells Taiwan dollars to the counterparty. So let's say Taiwan sells it to BlackRock, okay? And Taiwan buys US dollars of another foreign currency from the counterparty. So they say, look, we'll buy your dollars and we'll give you Taiwan dollar, all right? So think of what they're doing. They're buying dollars, okay? So the principal amounts in the Taiwan dollar and the US dollar typically exchange at the start of the swap. And then over the lifetime, you just pay the difference in interest rates. That's all you do. So if the interest rates in America are higher than Taiwan, then they give the money to the dollar people or vice versa, okay? Taiwan can use these swaps to manage dollar funding needs and hedge US dollar currency exposure from its large foreign investment portfolio. Now, this goes back, we talked about Japan the other day. All these portfolios are multinational, multi-currency, multi-everything, okay? It's not one way. They're not in Taiwan. All these institutions are global, period. And we'll remind you again, they're all leveraged to the hilt. So we now know this is just Taiwan, but all the countries are looking for that. And when we asked who were the countries that were not hedged, it was all the European countries and financial institutions, Australia, emerging market economies, including Taiwan, South Korea, and others. Asian creditor nations, Japan, Taiwan, and South Korea, they were not hedged enough. And countries with swap line access like South Korea, Singapore, Brazil, and Mexico, they were under hedged. So think about it. The whole world was under hedged against the dollar. So just like the Taiwanese, you can swap out the word here on Taiwan to any one of those countries, and they sell their currency and they buy the dollar. So, is there any proof of this? Okay. Well, in 2024, NDF volumes were 16 trillion, up 22% from 12.5 trillion in 2023. In 2025, there were 4.9 trillion, up 25% over 3 trillion in the second quarter of 2024. Okay. And they show that and in the last sentence here in this first part, they reported a 35 to 50% increase in NFTs in over 2024. So what does this mean to us? Well, when we hit all these people with the tariffs, what they did is they started to buy the dollar so they could hedge it. What happens when they stop?